Welcome to Steve Couper's podcast for aspiring real estate investors. Today I'm super excited to have Vitaliy Babiy join me on the podcast. I know that you are a very influential person in this real estate investing world, and I look forward to asking you some questions and sharing your thoughts with our viewers. I can't wait to find out more. Why don't we start with you introducing yourself and explaining a bit about your background for me?
Well, my name is Vitaliy, and my background, I spent my life working 9 to 5. I was in IT industry. I was an IT architect for a long time, working for one of the major banks in Canada. But it kind of felt recently that I'm stuck in a golden cage and I want to get out. And for us, real estate was the way out. That's where we found how to escape by 9 to 5. And last year, I successfully left my 9 to 5 to focus on my real estate business.
That is everybody's dream. I think we got a way out of this cage. I think that golden cage is a great way to describe it. I love what I do, but I also recognize I need to keep on spinning that hamster wheel there because there's so many pressures on us financially that weren't there when we started these career paths, right? How do we get past it? Tell me a bit more about your investing then. Tell me how you got into that. I know you wanted to get out of the golden cage. How did you find yourself getting into real estate investing?
Well, we tried different things in the past. We started with the flipping houses, then we kept some single families as a rental. But then we realized that it's not really going anywhere, and it's just impossible to accumulate enough single family rentals to provide for the income which I need for me to retire and then for my wife to retire. So we started to look around to find the solution, and we discovered the concept of multifamily apartment buildings. And that completely changed our trajectory. We sold everything we could. We pivoted completely to multifamily and started acquiring multifamily apartment buildings.
It's the dream for me. Let's walk through that a bit further then. So getting into multifamily, there's so many different markets that one could be playing in. Where do you shop? Where is your market of choice?
Market of choice is our backyard. We focus on Southwest Ontario. Our property is all scattered between West GTA up to London, Niagara Falls, Kitchener-Waterloo. The recent acquisition was in Owen Sound. And we like Ontario. We stick with Ontario. I know many people run away from Ontario, but we're very bullish in this market. And for our strategy, Ontario works the best so far.
Perfect. Well, let's understand more about your strategy. There's a lot of different approaches one can take with multifamily or with real estate in general. The options are really like squirrels popping through your head as the day goes by. But tell me, what's your approach? What do you look for in a building, and what's your approach from a strategic perspective?
So our approach is value add on a multifamily. So we're looking for mismanaged, underperforming properties, usually like neglected with some delayed maintenance, unrenovated for a long time. We buy them, and then we come in and do strategic renovations, expense optimizations, all the improvements. And hence we improving living conditions, increase the rents, increase efficiency by reducing our expenses. And we found that this strategy heavily depends on a few factors, and one of them obviously is our active appreciation, what we do, all the work we put in, but also passive appreciation. And the passive appreciation is basically what is the property, how much property value increases year over year without you doing anything. And Ontario, Southwest Ontario has the highest passive appreciation year over year. And we figure out, for our strategy, that's the best place to be. And that's why we're here.
So back to market then. So year over year, you're noticing that it's got the best appreciation across Canada, you think then?
Yeah.
And that despite all of the news that's circulating about problems with condos and housing, single-family home values and everything else, you're seeing the appreciation is there in the multifamily properties.
Yes, exactly. So many people got burned by single-family rentals and condo market, we know, in shambles, but multifamily apartments didn't get hit by all these negative things happening in the market. Multifamily apartments, they've been strong, they're going strong, they've been going strong for the last, I don't know, 40 years, give or take, without any year of the negative. And
Is it?
especially Ontario market, because we always have a shortage of living space in Ontario. So it's very stable and appreciating market.
This is the beauty of it, right? Multifamily assets are appreciating at a steady pace, unlike our RRSPs or stocks that don't have all of the spikes and dips and valleys. You get a steady increase with the multifamily. I love this approach. Tell me more about the asset class. Do you like new buildings? Are you looking to fix up old ones? We talked about, neglected properties. I assume that means something that's got a few years under its belt. Do you tackle any land development? What is it? Tell me more about what you do.
We don't do new builds. We definitely focus on existing older buildings. Older, I don't mean like very old, but basically existing buildings. And because that's where the strategy comes into play. You come in and you do the strategic improvements, innovations, optimizations, and those assets, that's where the money is. You can actually quickly improve situation and push valuation high enough so at refinance you can recoup your initial investment and then keep the property free and clear without your capital invested in it.
So, in in all of the various skills one has to have as an investor in real estate, and especially in multifamily, one of the things that I noticed that you've taken on is you've started an underwriting club, a place where people come and they present their deals, and you've got a group of your peers that are there to help ask questions and potentially make that deal better. What part of your skills or your history prompted you to want to do that, and how's it going? I guess tell me more about it.
My skills, I guess I'm just good at math. Math kind of comes naturally to me. I'm a very technical person, and the math is part of the package. And when we started, we looked around, we tried deal check and other things, and when we learned how to underwrite multifamily, well, I ended up just doing my own spreadsheet and my own calculations and everything. But as we progressed and we realized that many people actually, unfortunately, going ahead for the deal without really good understanding what's involved, and the numbers sometimes being like super optimistic. There is no contingency, there is no risk mitigation strategies whatsoever. And I look at this, it feels like people set themselves for the failure, right? So that's how this underwriting club started, to collectively help each other, just to be the second pair of eyes. When you have a project, you bring it in, everybody will look at this, and some people more experienced, some people less experienced. For the less experienced, it's a learning exercise, and for people who are more experienced, it's a chance for them to give back to community, to share their knowledge. Quite often we have people who want to invest in remote markets.
Mm-hmm.
And then we have somebody from that market who is actually local, and they will be providing their own perspective as a locals, right? Which comes invaluable. You cannot buy this anywhere. You cannot Google these things, right?
Yeah, there's a real limit to it, isn't there? I
Exactly.
think I've had a chance to present on your in your club, and I thought it was a great experience for me, hopefully for the audience as well. I think sharing knowledge is one of the gifts that you never put a real price tag on. I appreciate that you're providing that venue. In the course of doing this, I'm curious, like I know I have my own analysis tools that I've developed and or put together from others that have shared information with me in the past. I see a lot of, and you mentioned deal check. There's a lot of different ways to underwrite a property, but it all comes down to some basics, some fundamentals. But as far as taking it all together, I mean, the thing that you mentioned about contingency and risk mitigation, I feel that that's what underwriting is really all about, is understanding where the business is at with some real numbers and making sure that you've put the right kind of risk mitigation strategy in place to cover the variables that are outside of your control or knowledge. And you're right, I think we all come at this, or many people come at this very naively. They're optimistic, they're full of all kinds of energy coming out of a boot camp or something and ready to roll. But meanwhile, there's a lot of knowledge that you accumulate through time or experience or just practice that I think is invaluable. Your history in underwriting Have you, in the course of the time that you've had this club, has your approach to underwriting changed based off or as you accumulate information from the others that come and present on your show?
Yeah, I think it's always learning exercise, right? And even though like I'm pretty good in my underwriting, I always listen to what people are suggesting because everybody bring their own unique perspective, their own unique skill set and experience, and sometimes it's like local knowledge. It's priceless, and you need to take all this into account. In some cases, it might not apply to your scenario, but just you kind of put it in the back of your mind is that okay, next time when I have a deal which kind of fits this, I
Yeah.
need to remember this information for sure.
Yeah. No, I think this is wise. It's very wise. So, tell me about the deals you've got. Like, how many and how long? I guess. Tell me more about the investing history here now and what you got going on.
Well, we've been investing in multifamily for the last give or take 3 years.
Three
We've been very
years.
active.
3 years and you're ready to retire now. You're actually full time in this. I love that.
Yes.
I'm sorry, I had to pinpoint that. 3 years and you're now at the point where you're actually doing this full time. That's
Yeah.
fantastic.
But
Great,
we were
great.
very motivated and very active and I would say even aggressive in our approach. Like in the beginning, when we started, we drove all around Ontario because we believe in actually seeing markets with my own eyes. That again, that's the local knowledge you cannot get in any Google. When we would look into a new market where we never invested, we just hop in a car, me and my wife, and we drive there, we drive around. We stop by the local Tim Hortons. We talk to local people, and that's how you get those absolutely priceless bits of information which no Google will ever give you. And we've been doing this for a long time. Like we drove all around to figure out where we want to invest. We got all the connections with the municipalities, the planning departments, because we believe you need to find that unique combination when the town, the market is not shiny yet, is not hyped yet, but you see there is a big potential coming to the city. And if you see big potential, let's say you talk to municipality and they tell you like, oh yeah, we have, I don't know, millions of dollars planned to invest in a city by big corporations or maybe government, or there are lots of building plans, or that's the place to be, right? Because you
Mhm.
need to get in on the ground when, again, the property prices are still relatively not expensive, but give it a few years, the situation will change.
You're absolutely right. You need to actually imagine where the puck's moving to, as Gretzky said, right? So where
Exactly.
they're going to be. Typically, in order to do that, we'll perform a bit of market analysis, right? And so what's your approach in that? I mean, apart from Tim Hortons and talking to the city hall, what's your approach in market analysis?
Well, it's market analysis starts usually, yeah, like just online research and just see what the municipality is about. And but the biggest part is actual personal connection with the municipality. You go and do the personal introductions, start talking to planning department and others, and that's how you understand what's exactly in plan for the city, right? That's the many people unfortunately overlook this step. They just see property and just oh yeah, like on the paper looks nice, but you need to take into account what's gonna happen with this municipality, give it 3, 5, 10 years in the future. Where is it going? Is it growing or is it shrinking? Is it dying?
That's the key, right? Know somewhere that's not going to be shrinking on you. So you said you got several, you told me earlier you had several offers that are submitted today. That's pretty exciting stuff. What size
Yeah,
of
we're
sorry.
working on few bigger projects as well. So one is the 74 units in Kitchener,
Wow.
uh, few others at kind of similar size. They both is going to be value add. They're all going to be utilizing MLI Select program to leverage the high loan to value, which for my investors gives better return, less capital invested, better returns. We use MLI Select uh, with the affordability. We focus on finding those markets where affordability still makes sense, and the special unit mix for the property, which will make this strategy work. Like in particular, you need to have a certain amount of like bachelors or maybe one beds, which you can claim as affordable living, and plus some more expensive 2 beds, 3 beds, where you actually can make some more money.
Perfect. So, I mean, did you imagine 3 years ago you'd be buying 74 unit apartment buildings?
No, it's been a roller coaster for sure. It's been very active few years, and you're right. I could never imagine that I would own the portfolio we own today. We just closed 76 units few months ago, and we have few others in the pipeline. It was not imaginable a few years ago.
So you and your wife are both partners in this Samara Capital Group, right?
Absolutely.
Tell me about who does what in this partnership.
Well, she still has her 9 to 5. She still works. So I mostly focus on operational part, and she absolutely helps me with all the marketing and promotions. And she's my just driving force. We also have a property management company. That's our another business, which we started also recently to support our own properties. And now we're also taking extra clients to help others with the property management needs.
Nice.
So we're growing. Samara Capital Group is growing rapidly.
That's great. That's great. So when the magic in multifamily properties happens around the refinance of the endeavor, right? So with these kind of numbers and the number of properties you've got going on, one of the things that struck me when I was learning this myself was the ability to ladder the timing of all of these so that you're refinancing 1, 2, 3 properties a year, sort of thing. That allows for tremendous accumulation of wealth. How have you structured it? How many properties do you have now?
Few properties,
A few.
not that many.
So I mean, and typically it's on a 5 year cycle, but you'll refinance at the value at the point where you've optimized the property, and then move on to the next, right? So
That's right. Smaller properties, we just refinanced one of the smaller properties, and it took us like 7 months from the purchase to refinance. So obviously the bigger projects, yeah, that would be like a 3 to 5 year term for sure. But the smaller properties, you can be more aggressive. Again, if you know what you're doing, if you have a team, if you have a plan and strategy. Usually you would buy something on a bridge loan and then come in and aggressively do renovations and tenant turnover and all the improvements, and then exit with CMHC. Yeah, that can be like a year. In our case, it was only 7 months.
yeah, no, it's a magical thing. I really love this. It's exciting and it's rewarding and it's got the right amount of stress, I think. It's important to have a little bit of tension, but not to the point where the band breaks, right? So I think it's fairly balanced. I like it.
But it's also exciting. It's also exciting to see how living conditions improve in your properties. And when I see reactions of the tenants who've been living there for a long time and now they see how the property is changing and they see the new units. And most of our turnover in some buildings, all the turnover just happens naturally inside the buildings because we renovate the unit and people just move from one unit to another because they want to live in a better place and they're okay to pay more for the better apartment. So it's not like they had a choice and by choice they live in an outdated apartment. No, it's just
That's perfect, right? That's perfect. I mean,
yeah.
real estate is really all about people, right? If you think about it from one end of this business to the end, one end to the other. It's about markets where people are moving to. It's about tenants that we're looking after providing safe and comfortable places they can call home. It's about the investors that we work with to raise the capital to participate in this. And I think it's just a magical way to support our communities, right? So I think it's fantastic what you're doing. I really do.
Yeah, absolutely. And we utilize affordability like a big time. And we also, even though we leverage affordability program to get my investors a better deal, but at the same time, we believe that affordable living should not be ugly and like inky-dinky apartments. The fact that it's affordable doesn't mean it needs to be bad. We renovate our units, they're nice and bright and clean, and it should be a safe place to live. So we trying to improve living conditions everywhere. We're trying to improve our communities. And it's very satisfying, to see how the people's lives change.
For sure, for sure. So we all get into this for our own reasons, and I'd love to actually learn a little bit more, a little bit deeper about your why. Why are you doing this? I mean, you mentioned at the onset the gold cage, but let's talk more about your why and what it is that you're trying to achieve. What's this your goal? How are you going to know when you get there? How's this journey for you?
Well, it's a loaded question.
Isn't it? I try to pull three or four different aspects and put it in one sentence.
I guess for me, why is I want to have freedom to spend more time with my family. Because at a certain point in your life, you realize that the time flies super fast, and before you know, your kids are gonna grow up and fly away and leave the nest, and you will regret every minute you didn't spend with them. So, and for me, that was very one of the dominating factors for a long time, because I felt like me being at work all the time, I'm missing all the important things in life. So I guess that's the major why for me personally. I want to spend more time with family, with my loved ones.
So does success look like more time, or what does success look like? Paint that picture for me.
Yes, it's a freedom. It's a time freedom and location freedom, right? When you build successful business, the ideal goal is to build a business which is operational without you being present. It just works as a well lubricated machine, and then you buy back your time. You can be anywhere in the world, go on vacations, you can travel, you can live anywhere you want. And that's in particular, that's what we offer to our investors, right? We do the work, you invest your capital, and you just reap the rewards. You don't have to be here. You can be, traveling the world and enjoying the cash flow.
Yeah, that's perfect. That's perfect. Hey, if somebody wants to reach out and find you or connect with you, say it's another investor that said, boy, that sounds awesome. I want to travel the world with Vitaliy. How do they get in touch with you?
Well, you can find me on Facebook. You can find me on Instagram. My nickname is Deal Architect. We'll I guess, provide the link to our calendar where people can book consultation with us, just get in touch with us, and email address and everything.
Perfect. We'll make sure we share that. Any last words for our audience?
No, I guess the only thing I can say is that people quite often just sit on the sidelines for too long and wait and wait and wait and don't realize, especially in real estate, time works for you. The sooner you invest in something good, the sooner you will actually have some rewards. And clock is ticking. Don't sit on the sidelines. Get something, invest in something, and while you're busy with your life, that something will grow and build a future for you.
That's right. That's right. What's that Japanese proverb? I've read it recently. It's the best time to plant a tree was 20 years ago.
That's true.
The second best time is today. Vitaliy, thank you so much for your time. It's been an absolute pleasure having you on the show.
Thank you, Steve. The whole pleasure is mine.
It's been a joy. Thank you so much, my friend.
All right.
Bye.